The technology sector has the potential for significant earnings, growth, and price appreciation ahead. A frenzied week of macroeconomic data and big earnings news offered glimpses under the hood of both the U.S. economy and some of corporate America's highest-profile companies. Alphabet grabbed the spotlight among last Wednesday's reports as the Google parent company blew past Wall Street's expectations. High demand for cloud and AI offerings drove a meaningful acceleration in growth, indicating to investors that significant AI investments are paying off. Strong growth in Amazon Web Services highlighted the e-commerce giant Amazon's report. The unit accounts for most of Amazon's operating profit, and intense demand for AI computing power drove the fastest quarterly sales growth since 2022. At a higher level, all four companies met or exceeded earnings and revenue estimates and ramped up spending guidance yet again, now tracking toward $725 billion for this year, mostly earmarked for data center build-outs and equipment. Profit margins for the S&P 500 are at record highs and are likely to continue to go higher as AI adoption fuels productivity gains and revenue continues to grow at a solid pace. Technology sector operating margins are expected to exceed 36% in the first quarter compared to just 13.1% for the rest of the S&P 500. With the S&P 500 at record highs and technology having outperformed the broader market in 2023, 2024, 2025, and year to date, suggesting the sector is reasonably valued may be hard to believe. However, at a forward price-to-earnings ratio, PE, of 24, just 14% above the S&P 500. With compelling margins and earnings growth to the broad market, we believe the sector is undervalued. If you have questions about the stock market or your investments, contact us today at Ox Road Capital.